Hi, my name is Pramod Achuthan. I'm a partner with the Corporate Tax and Regulatory Services practice of EY Pune. I'm also the auto sector tax leader for EY India. In terms of budget, with budget around the corner, there are a lot of expectations always flying high, and everybody would like more deductions, more exemptions, more allowances, lower corporate tax rates. But is the FM really likely to be able to do all of this? If you look at the tax collections, the tax collections have been very buoyant, both on the direct tax side as well as on the GST front. But at the same time, if I look at the targets in terms of PSU disinvestments, we've not really achieved too much. So from a fiscal deficit standpoint, I don't see too much headspace for large scale exemptions, deductions and all of that. But yes, there are some specific asks, that, from the industry perspective, I would like to table. And we'll eagerly look forward to what comes out on 1st of Feb. So let me begin. The first one is of course on this concessional tax rates, which India introduced a few years ago, and there is a 15% tax rate available for new manufacturing setups. Now these manufacturing companies need to start their operations on or before 31st March 23, and with the very interesting PLI schemes which got introduced, and very successful PLI schemes which got introduced over the course of the last many months by the government, I would expect that the government gives companies more times to set up their manufacturing, and therefore look at extending this particular March 23 deadline at least by a couple of years. That's ask number one. Again, related to this, this benefit is available only for manufacturing setups, and I would like to see this benefit to be extended to the services sector as well. You could have conditions of additional employment generation, but it will be good to extend this to services sector as well. Again, this particular benefit, I would urge the government to consider extending this to LLPs and partnership firms as well. So that's ask number one on the concessional tax rate. The second ask is pertaining to mergers, and we've seen immense M&A activity in the country over the last 1 year, but there are some wrinkles to be ironed out still in the tax regime applicable to mergers, and a few of them, if I were to put on the table, one is allowing carry forward of loss and depreciation in case of amalgamation of entities in the services sector. That's one ask. And the second ask, there is this section 79 which says that loss cannot be carried forward if in case of unlisted companies there has been a change in shareholding of more than 51%. If the government can look at eliminating this section for genuine cases of genuine mergers, because the government would like to introduce revival of companies which have been impacted by COVID. That takes me to the third point around COVID. And COVID has hit, and we are in the third wave today. But something around transfer pricing adjustments, because companies have been economically impacted, and either a particular economic adjustment or looking at only single year data, some kind of transfer pricing adjustment if the government can come up with for the couple of years by which when we've been impacted by COVID, that would be good. The other one is of course clarification on work from home tax holiday for IT companies, so that will be a welcome clarification. The other thing that is happening is of course you would have heard about the OECD BEPS changes and the pillar 1 pillar 2 recommendations. We are of course 15% minimum tax rate prescribed under pillar 2. India is of course in sync with that, but around that changes around equalization levy for the next couple of years before it hopefully goes away is one aspect where at least the companies are looking forward to clarifications that online ordering of physical goods on internal platforms should not be covered in equalization levy. Clarifying ordering on emails should not be subjected to equalization levy. Also clarifications on commission models. I think some of these clarifications on the equalization levy aspect is something that is expected. And the other piece is of course the SEP provisions. So the significant economic provisions, if those could be deferred, that would be a welcome change. I'll come to my last bucket of changes insofar as applicable to corporates, and this pertains to startups where I would expect today, of course the Prime Minister has made a comment of how startups are changing India, and how there are 60,000 startups registered in India, and how so many unicorns have come up in the last 1 year. Today, from a tax benefit perspective, there's a 3-year tax holiday that is available. There's an angel tax exemption which is available. But all of this is linked to a 2-stage approval process. And what we have seen is most startups don't have the 2nd stage approval. And I would urge the government to look at an option where the 2nd stage approval is done away with, and these tax benefits are extended to all startups who satisfied the 1st stage approval. And that really brings me to the end. On the personal tax front, of course, there are expectations around increase in standard deduction or a specific work from allowance. But yes, we are all eagerly looking forward to the D-Day to see what will come up. Thank you.